Today we got, we're first started off with Aidan Mills, CEO of Northstar Clean Technologies, symbol ROOF, roof on the TSX Venture Exchange. They are a pioneer in sustainability for industrial products and have a patented technology to fully reprocess asphalt shingles into their component parts. It's a really big project, removes an enormous amount of discarded shingles that would otherwise be going into landfills. And Aidan has absolutely knocked it out over the park last year with government grants and funding and strategic partnerships, which we'll go into. And with that, Aidan, I won't steal your thunder. Welcome to the show. If you don't mind, I'm going to stay live with you and maybe jump in with questions as we go on. But from here, I'll let you take it away.
Sure. Thanks, Arlen, and thanks for the invite to the conference. Excited to be here, yeah, looking forward to it. So you can see my screen.
Yep, you're good.
Okay, perfect. So yes, as Arlen said, so my name's Aidan Mills. I'm the CEO of Northstar Clean Technologies. Kind of a bit of a background why you're listening to an Irish guy talking and presenting on a Canadian clean tech conference. So I worked for BP for 19 years. Ended up as the senior VP of natural gas trading and oil trading here in Calgary. Moved then to Husky worked at Husky for 4 years, and then a couple of years at Goldman Sachs as the co-head and managing director for leading commodity sales for North America. And then after working for Meg, I joined Northstar a couple of years ago. And it's interesting. I mean, this is a really interesting time to present the Northstar story, having been here 2 years, because I think that fundamentally this is a brand new company. I think we have actually transformed the risk of this company as a clean tech startup. And I actually think that I would describe it as the kind of risk reward balance of this trade, and the risk reward balance of this company is in a phenomenally different place from where it was 2 years ago. And there's six big things that I would say that are the reason for that. So number one, as Arlen mentioned, our technology is a kind of three-stage technology, and we've got a US patent in place for the first stage, and follow-on patents already filed. Similarly, in Canada, it's being applied for and internationally. Secondly, and probably most importantly, on the technology side, we've done massive de-risking of the technology. We have a pilot plant in Delta in BC, which we ran all last year, and had input from not only our operations, but also vendors and also customers. So we've totally de-risked the technology for the next step, and I'll describe that a bit today. Thirdly, 2 years ago, we had no strategic customers. And now we have a strategic customer in paving who are taking our asphalt, who are one of the biggest multinational, multi-billion-dollar international companies in the paving industry. And we also have signed a deal with one of the biggest North American shingle manufacturers as well. So we have, as you think about asphalt and you think of the markets that goes to, we have secured, two of the biggest markets that actually exist for our product. We have a commercial plant, the first commercial plant. So the step up in the technology from pilot plant to commercial plant. We have a first commercial plant that you as investors can listen to and say, that's great because it's fully funded. So I'll describe exactly where that is, but there is no funding risk for the first commercial facility. It's completely funded and ready to go, and I'll kind of describe where we are with that a little bit later on. And the fifth thing is the market for this product, and the market for our product and our technology is growing. And there's multi-billion-dollar companies, again, on the roofing sector who've come out and said, we actually need to solve this problem. So a bit like carbon neutral statements from oil companies, we have the industry actually requiring attention. And we believe we're the only commercial technology that actually works to deliver that. And the runway for that market is absolutely staggering and I'll talk about those numbers again. And then the last thing I would say is the appetite for us to grow, the appetite for us to move to additional jurisdictions after we built the first plant is huge as well. So from a government perspective, from an industry perspective, from a market perspective, the ability for us to take this technology and literally roll it out across North America is transformational. And so when I joined 2 years ago, none of that had been put in place. Now that's where we are. And when I joined 2 years ago, we had just IPO'd at 35 cents.
Mhm.
And today the stock is at 16. And so if you think about that stock price having achieved all of that de-risking, and of course it's a pre-revenue company, it's obviously the whole market dynamic of TSXV, but actually the risk reward balance for the trade is now unbelievable versus where it was.
Great. We'll dive into it.
All right. So clean technology is as Arlen said, what we do is we take asphalt shingle tiles that come from roofs, either waste tiles from the manufacturers or the stuff that actually comes off roofs once they get done. We can take the asphalt shingle tile and split it up into its individual component parts. So into the front end of our facility goes a shingle tile. Right, the back end comes about a shingle tile is about 50% sand, about 25% asphalt, and about 25% kind of fiber. The older tiles, the fiber is paper. Newer tiles, it's fiberglass, and also some of the limestone that's kind of incorporated into the tile. So that's what our process does: is it takes that and splits it up into its individual component parts. And here's the problem with asphalt shingle tiles. So across North America, in a year, about 16.5 million tons goes into landfill. And that's growing every year. This is the figure from last year. And if you take that roughly 25% content of asphalt in the tile, that's over 20 million barrels of oil per year going into landfill because of shingle tiles, which is a staggering number when you think about how much oil that actually is and how much is there to be recovered that we recover as part of our technology. The Asphalt Roofing Manufacturing Association. So this is all of the big shingle manufacturers. So that's ICO, TAMCO, Owens Corning, et cetera, et cetera. They're all part of ARMA, which is the Asphalt Roofing Manufacturers Association. And last year they came out with a strategy statement. So this is, as I describe it, the equivalent to the carbon neutral statement from the oil companies. And they said they wanted to divert 50% of all of these shingles that are going to landfill away from landfill by 2035, and they wanted to divert 100% by 2050.
So all those guys like TAMCO, Owens Corning, ICO, they need to find a solution.
Absolutely, because
to recycle or they need to find a solution for these shingles, basically.
Yeah, absolutely. Because at the end of the day, if they don't find a solution, governments will come down with producer responsibility and tell them that they have to do it. So exactly the same way, just exactly the same as has happened in plastics, where the actual producers of plastics have been told you need to have 5% or 10% or whatever recycled content, and you need to solve this now, or we're going to start, or you're going to start getting fined.
Okay. So TAMCO is using you, it sounds like, as their avenue. Have any of these other companies started making progress towards this initiative?
Yeah, I mean, Owens Corning are looking at a powder-based technology. GAF, the big manufacturer, are doing a briquette technology. But a number of people have looked at this and feel that ours is by far the best, because what it produces out the back end is not a modified, it isn't a modified product. We literally reproduce the base asphalt that can go back into any part of the manufacturing. So that's the real advantage that we have, is we essentially split up and produce those base products that can be completely reused. And so our thinking has always been, paving, asphalt into paving is relatively straightforward. But actually the real challenge for us was asphalt into back into shingles. And I'll describe it later, but the strategic deal with TAMCO, that's one of the biggest shingle manufacturers who is essentially, from a technology perspective, said, we think your stuff works. So when people look at the investment and they kind of go, well, is the technology proven? I can CEO arm wave and say, of course it is, but actually all you need to do is look at all the R&D that McAsphalt Colas did on the paving side, and all the R&D that TAMCO did on the shingle side, and that's the proof right there that this.
Yeah, who cares what you say?
Exactly.
Right on. Okay, cool.
All right, so we had a pilot plant in Delta, and we ran that last year. And that we got input as we ran that from both operations of running it from kind of front to back. We got feedback from the customers, so McAsphalt and Tamco, as a couple of the customers who have done R&D in this, and we also got input from the vendors. And now we're moving into the first scale-up facility. So this is going to be built in Calgary, and I'll show you some pictures in a minute. The target is about 150 to 200 tons a day. So from a 10,000 foot level, this facility will divert 40,000 tons of shingles per year away from the Calgary and surrounding area landfills.
Wow.
Our plan is that all our plants will be this size. Generally, if you've got over 1 million people, that will produce enough shingles for a 40,000 ton facility. And the real advantage about these is, approximately 15 million to build it with respect to capital. And I'll talk about the numbers a little bit later. But the real advantage of this is it's modular, and we will literally step from Calgary across North America with these facilities. The real advantage is you can put it close to landfills as the guys that are taking shingles or the waste shingles are coming in. Somebody, the Calgary facility is 5 kilometers from the East Calgary landfill. So the drivers don't even have to go further. They just turn left to us rather than turning right to the landfill. We get paid the tipping fee, or discounted to start with, but a tipping fee. So we get revenue in the front end, and then we have the offtake on the back end.
How much could you bring down CapEx with scale? If you're building 5 plants at once, kind of thing.
Yeah. So I think we definitely think there's capital efficiency, because as you think about going to somebody now and saying, well, listen, we'd like an evaporator for the back end of our plant, and this is the first time we've turned up to them, then there'll be a price. But when if we're building 4 to 5 a year, which is what we expect to do once we're in kind of in full rollout mode, we think there'll be significant capital efficiency. And just from ordering. And I think also we'll find as we go, BBA, the engineering company, were chosen not only for their ability to do this facility, but also to do process improvement. So we think Plant 8 will be better than Plant 7, and Plant 15 will be better than Plant 14. And so the advantage about that is your process improving all the time, and that will help both operations and capital efficiency.
Well, I'm curious about when you get partners like Tamco, what kind of buying power they have and relationships they have too, as well.
Well, yeah,
just to reduce CapEx, right?
Yeah, and part of the Tamco relationship is actually that they're helping us with the engineering, the design, the operation, etc. They've got this whole Six Sigma operational efficiency and improvement, so we can tap into their skill sets there whenever we start the operation up.
Okay.
Okay. So the other thing that's super important about this is the carbon footprint from the plant. So so this is a manufacturing play where we get paid on the front end, we get paid on the back end. We have a project return of over 30%, or IRR over 30%. And so it makes absolute sense from a manufacturing perspective, but the ESG upside is absolutely huge. So the reason that Tamco, the reason that we have discussions with Colas and McAsphalt and all those guys is because of the ESG footprint as well. So not only are we diverting the 40,000 tons, which municipalities love, but the asphalt that comes out the back end has got a 60% lower carbon footprint than the base case.
Interesting.
So it's literally the lowest carbon asphalt, in our opinion, in North America. And that's comparing it to taking a ton of asphalt shingles, throwing them into landfill, and replacing that with virgin asphalt. That's how we do the calculation. And the other thing that's really important is when we look at the economics, is the $10 million worth roughly of annual revenue and the $5 million worth of EBITDA excludes any carbon credit or any environmental premium from diversion or any carbon credit whatsoever. I intentionally, when I set out the economics for these plants, said zero the carbon benefit, because that's upside. We need to do obviously the proprietary work and establish the protocols and all that kind of work once the plant is running, but that's upside to the economics.
Well, I think, correct me if I'm wrong here, but I think some of the big upside here is the increasing tipping fees too,
Right,
as well. Like tipping fees are never going to go lower, right?
right,
Like we don't have more space to throw more waste around in this world. So tipping fees will always go higher.
right.
And you will always be a percentage of that. So you got leverage on that ongoing. But I think what about you must get leverage to the price of oil and some sort of base case scenario or upside to the price of oil. Is there any kind of
Absolutely. So if you look at the revenue split across the model, 35% from tipping fee, which is only ever going up, as you say, and the back end, 60% is based on asphalt price. So if you think about the way that's what's happening with North American energy, whereby increasing amount of renewable fuels are being refined, and refineries are repositioning to renewable fuel refineries. When you reposition your refinery to renewable fuels, you don't have any more asphalt. You don't have heavy oil going in there. And so the shingle manufacturers are actually concerned about the availability of asphalt fundamentally. And asphalt is an oil price derivative and is driven straight off the oil price. Our contracts are generally indexed to asphalt on the back end. So as oil goes up, asphalt goes up. So if people have got a bullish view on oil, they should have a bullish view on Northstar, because exactly the same effect will happen with the asphalt price coming out the back end. And if the supply demand tightens asphalt as well, then what actually happens is the asphalt price goes up, irrespective of the oil price, because of supply demand. So the fundamentals for this business, which are driven by two key facts, which is what's happening with tipping fee and what's happening with oil price, are hugely bullish.
interesting? And what's happening with carbon credits?
Yes, and what's
Mhm.
happening with carbon credits, which we have zero revenue credited to this model today. And the other thing is, we've been fairly conservative on the operating principles. So this facility can operate 24/7. So for example, if we build a facility in the GTA, and there's enough there's enough shingles in the GTA to build 4 plants. If we build 2 plants and run them 24/7, clearly the upside from operation is huge. And this process can run 24/7. These economics only assume 6 days a week, 10 hours a day.
Okay.
So, availability of shingles and the ability to step up that operating is absolutely huge.
Okay.
So lots of upside of that 5 million, we think. Um, and then let's talk about, so I mentioned it at the beginning, and so investors can sit out there and kind of go, well, yeah, but that's okay, but like, where are you with respect to funding? Calgary is fully funded. So first element of 3 legs of the stool, as I always describe it. First leg of the stool came from the Alberta government. So in terms of being non-dilutive, the most non-dilutive you can ever get, because it's a grant and doesn't need to be repaid. We got 200K from Alberta Innovates when we started engineering, and we've got 7.1 or 7.088 from Emissions Reduction Alberta. We applied for their circular economy challenge, actually about last year. Got awarded that in Q1, and we got awarded 100% of what we applied for, because Alberta looked at this and said, in terms of helping deliver Alberta's circular economy, this is exactly what we need to be doing. We then added BDC, so 8.75 million from BDC, and that is, and the most important thing about that loan is, 8.35%. Great rate, but it's actually amortized over the life of the lease, so
Mm.
15 years, which is excellent. Now we have lease extensions, single-sided lease extensions to bring it out to 25 years, but BDC were very comfortable in amortizing over 15 years. And BDC really like this technology, and are there for us again, with respect to kind of indicatively for 4 more plants. So we have the potential to work with them with for more plants. And then the last part, obviously, both Alberta and BDC wanted to see equity come into the equation, and this is where TAMCO, as I said, one of the biggest U.S. Shingle manufacturers, came in with a 10 million US equity commitment, in the middle of the year. So phase one of that was 8.5 million Canadian, and that was as preferred stock. 1-to-1 conversion, and that was done at 29 cents Canadian. And phase two, or the remaining, kind of remaining 4.7, that will be done along with Emissions Reduction Alberta milestones in the second half of next year, which is commissioning and operation. And those are done. That's done at as a debenture, 10% coupon, 29-cent convert, and half warrant at 50 cents. So that's the second part of the TAMCO deal, which will come next year.
Mm-hmm. So you talk about like BDC being there potentially for future plants. Does each province have available funds for grants similar to the ERA?
I mean, yeah, our assertion is yes. So we will go. And I'll talk about it in a minute about the GTA. But when we go to the GTA, we will do exactly the same thing with the Ontario government. And each one of the plants is standalone within a province. It rolls up to Northstar, but is a standalone entity. And obviously, with the green funds in the US, and both at the federal level and at the state level, we believe funding is available in every single jurisdiction. And the other thing, Arlen, that's really important about this is when you go to a city like Seattle or Portland or Toronto, and you say to both the provincial government or the federal, you say to the provincial or the state government and the city that we're going to divert 40,000 tons of shingles away from their landfills, it gives huge momentum, because a number of these cities, especially under the Clean Cities Acts, have got targets to do exactly that and reduce the amount that's going into landfill. So we think the support from both federal, state, and provincial is huge, and we should be repeating this wherever we go.
Mm-hmm. Excellent. Well, congrats on that financing. That's huge. I think what's impressive is like not only is you put all this, you've done all the R&D, built a product, but I think the challenge on something of a project this big is actually integrating yourself into their supply chain.
Right.
Like TAMCO, what do they do at 850 million a year US in rev?
Right. Yeah.
like well done. That's just huge. Right. And obviously you just want to cookie cutter that in different regions too. So good for you.
Exactly. So where are we with Calgary? So Calgary, the land development has been ongoing. You can see from the bottom right picture, September the 9th. And so we PR'd this, late last week, which was the site is ready. And today, I am bowling up with a number of different people to do a ribbon cutting ceremony. So thankfully I didn't have to present any later in the day, because I'm off with a massive pair of scissors to cut a red ribbon. And again, look, the interest in this, who's coming today? Like this, we've got 30 people coming to the site. We've got the MLA, Emissions Reduction Alberta, BDC, the Chamber of Commerce, Calgary Economic Development, the TSX, radio and TV potentially, and maybe even 2 or 3 shareholders, actually turning up. But it shows the level of support and interest when you get the MLA turning up to talk about what we're doing. So yeah, ribbon cutting on that today. And then the next 2 things that are happening is we're entering detailed design, and so that's happening kind of as we speak. And then the long lead items for the project will be ordered. Contracts are being negotiated now, and we hope to be ready to announce that in the next week or so.
Yeah. Aidan, we got about 3 minutes here. And obviously this is for the investors that are listening in. Can you talk about the blue sky? Like what does this ramp up look like? What kind of numbers does it look like when you're at 30 plants? Oh, you got a slide. Look at that. Maybe I knew that. But I just really want to hammer this point home to the investors on the call.
So I would say that the close-in next steps are the announcement of the development in Toronto, which we're working on now, and the first plant with TAMCO. We've got 3 plants. We've got an exclusivity with TAMCO for the first 3 plants in the US, where they take the asphalt and bring it into the process. Similarly, in Toronto, there's lots of negotiations going on with potential customers there. The blue sky is that we believe after 2025 we can be building 3 of these per year. And then similarly with the being able to license the technology into markets that we don't want, or markets that are less attractive to us. And when you go back to that ARMA figure where they wanted 50% of shingles away from landfill in 2035, that would be the equivalent of over 200 Northstar facilities. So when you look at our 30 facilities by 2030, that's a drop in the ocean as to what this market size is. Each plant, $5 to $7 million worth of EBITDA from our perspective. Each licensed facility probably about $1 million. And so if you think about blue sky of 19 or 18 of our sites times 5 to 7, and then the other 13 at $1 million straight to the bottom line from licensing, that's the upside that we've got.
And that's just like the tiniest fraction of the market.
Exactly. I mean, and yeah.
It's kind of good that the other majors are taking steps and initiatives toward this. Like, I think it's great to be a trailblazer. But on a project this big and an industry this large, it's also good to have other players in the sector, because there's no way that you could even touch 50% of it.
No, you've got to have industry development. We want to be the lead of the industry development, but the fact that everybody's trying to solve this problem, that's what we want. And the other thing I would say from a stock perspective is people will be like, and you would ask this question, which is kind of like, well, why should you not just buy when Calgary's up and running and just wait? Well, actually, I mean, my view is that we will continue to deliver on our promises for the Calgary project, but also, the end of this year, beginning of next, you will see the announcement for Toronto. You'll see the announcement for the US, and you'll start to see how we are rolling this out after Calgary comes on. So this is the time, in my opinion, to own the stock.
Now, what about securing supply? Like, are there companies out there that could say, hey, yeah, you get this up, I got 40,000 tons for you, no problem?
Absolutely. So the discussions in Toronto. So today, the GTA generally take all of their shingles and they bring them to Michigan. So we're talking with all the waste companies with respect to that. We're also talking to the shingle manufacturers about their waste shingles coming into our facilities. And yeah, so there's lots of discussion around locking up the feedstock, and then basically all we need to do is roll the facility out.
Right on. Great job, Aidan. Thanks so much for your time today. Aidan's always available. If anyone has questions, they can reach out to us or Aidan, and he's always very responsive. Excellent job, Aidan. We'll chat to you again soon.
All right. Thanks, Arlen. Thanks for the questions. Good to present. And yeah, good. Thanks for the invite. Great to be here.